Hello, I'm Michael Bell, the CEO of First Graphene. In light of having our AGM earlier in October, I thought it'd be worthwhile putting together a video of an update and run through the dialogue associated with our presentation to give our investors and our clients a bit of an update of where we're at as a company, what we're moving forward with over the next 12 months, and where we see our destination being in the coming years. Firstly, I'd like to thank our investors for their support over the last 12 months in financial year 2022. We've made some great progress over those last 12 months in terms of generating revenue, which is our core focus points over that period and moving forward, and also in narrowing down our focus points and better using our resources in segments we see the most success occurring. Secondly, I'd like to thank our early adopter clients. These are clients that are typically Western Australian based that have really supported us in developing and pushing forward the use of graphene in a number of different applications. They make up the bulk of our revenue throughout the last financial year and are a key part of our success moving forward. Today I'm going to talk you through the annual general meeting presentation that we gave that gives our investors our direction over the next 12 months and also a bit of a recap on our successes through the last financial year. I'll also touch a bit on our segments in detail and what we're covering both at present and where we expect to generate revenue in the next 12 months, and also a bit on our branding, our logo, and just general numbers update. To state the obvious here, some of you will have noticed that we have had a logo change in the last few months. The logo change is part of a broader rebranding, but it has been done on a very cost-sensitive basis. We've tried to keep our costs low, as that's very, very important to our progress towards that break-even point. We've basically changed our logo as an evolution of where we are as a company. We've changed strategy in the last 12 to 18 months, moving away from investing heavily on CapEx into our production facility, moved away and started to focus on generating a sustainable ongoing materials technology business. Part of that rebranding or the logo change is also to remind people that we're moving away from a mining company into a materials technology company, and that's something that's very, very important to us as we change our strategy continuously as we evolve. A large portion of our investor base had invested in First Graphene, knowing and understanding the mining space, which is important to us as it does provide our feedstock. But as we evolve, our focus and our attention is predominantly on developing graphene as a materials technology and driving that forward. It is about strategically or scientifically developing applications using a very, very unique material. It actually doesn't focus on where we get our feedstock because there is flexibility on where we get our feedstock. So it's important people understand and familiarise themselves with how a materials technology company progresses forward. Our branding change will be rolled out throughout our current financial year, 2023, and is done in an as and when required manner. It is not done en masse. Right, to talk through some key numbers from our last financial year, I'll focus on sort of three segments. Firstly is what we've done in production over the duration, what we've done in terms of strengthening our financial position and our success around revenue and our progress towards a break-even point. And thirdly, how we've refined our segment focus, which is actually it poses some of our largest challenges in how we progress as a company. From a production standpoint, we have continued to optimize our production facility over 2022. We have not, and the numbers will be shown later, we have not spent large amounts of CapEx into developing capacity. We have a capacity as it stands today of about 100 tonnes per annum of graphene. And as you'll know, this is more than enough to cater for our immediate demands and our growth rates moving forward. Therefore, we've spent time optimizing both the human resourcing of that production facility to match our demands as they stay today, to decrease our overall stock position. As you will see from our financial records, we have been carrying a lot of finished material stock, which we continue to work down to a safety stock level. We produce materials on top of that stock level as and when required by clients. We do not build to stock at this point in time. And because of that, we have had to reduce our human resources in Henderson to better match that. It also means that our time and efforts with those people in Henderson and the plant there is about optimization. How do we use our current equipment to make our material more efficiently, more effectively, and ultimately cost effectively? Something we've spent a great deal of time in is driving the cost of our material down. We as a company have some of the probably most aggressive pricing of graphene in the world today at a very, very good margin. But we need to have a strategy and a path to drive that price down as we move forward. Graphene is not a commoditized item yet. It may become one day, and we will always be on the front foot in terms of that. So both from last year and moving into the current financial year, our attention in Henderson is driving our costs down. It's at a very good place now, but it can always be better, and we will continue to drive that forward. One of the other aspects of what we do in Henderson is also to welcome the idea of producing downstream products. We don't always want to be known as just a graphene producer, because graphene is often one of many ingredients in a blend that will create an optimum product in the graphite, graphene, sort of graphitic type area. And so we do want to move downstream in the value stream. Part of this is being able to produce things like our admixtures and various master batches, etc., within the Henderson facility. And that is something that is ongoing. Again, this is not a CapEx. This is optimization of the current materials we have. For instance, in the last 18 months, we have produced an aqua-based product line. That aqua-based product line is just a variation of our existing equipment. It's not a new set of equipment. And so it just further optimizes and gives us better flexibility downstream. Next, just on our financial results. So the biggest move that we've had over the last 12 months in 2022 was revenue growth. Historically, our revenue has been relatively low, and it has been focused primarily on generating revenue from the sale of graphene. We have expanded that. We have driven a large increase, 100% increase in revenue through the use of our commercial managers, giving us in-segment rights to participate and sell into those segments. That has grown dramatically and will continue to progress in that direction. This is the start of what we see as success of actually putting a sales team in place within the last 12 to 18 months, which historically wasn't there. This is a direct correlation to how our revenue will continue to grow. Next, with our cost reduction and the time that our CFO, Adi Asthana, has really focused on driving our costs down, this has improved our overall position. We have reduced our losses by about 20% over the last 12 months, and this is a key factor in driving to that point of break even. We haven't and don't typically give you a path of revenue to break even point, because it is a real combination of both what your cost base is and what materials we sell. Materials, whether it be a pure graph 5 or a pure graph 50 or 70 even, vary greatly in cost and margin for that matter. So giving a predictable rate in which we will grow to that break-even point is difficult. What I can assure you is that we continue to drive our costs lower, and there is still further areas in financial year 23 that we can drive those costs lower, but also better use our funding to accelerate segments such as the cement and concrete space. So really good progress throughout financial year 22 in driving those costs down and starting that trend. Thirdly, in the financial control sense, that cost reduction or that overall operating reduction in cash has really strengthened our burn rate. It has reduced our burn rate dramatically, which essentially means the capital we do have extends further. We have a longer cash runway, and that's improved over the previous year by some 48%. That's a significant driver, and it really helps us better predict our burn rate and also what we're required to get to that break-even point. Lastly, and looping back to what I mentioned about the production space, our CapEx is reduced by some 94%. Now, this is not in relation to our investment in technology and with a way to produce graphene. It is just essentially a way of controlling what we're doing, how we're spending it. So in the factory, we spend on maintenance to maintain our equipment, and secondly, to just optimize it and be able to make our product cheaper as we move forward, as opposed to buying new equipment. Lastly, on this slide, I wanted to talk about our segment focus. One of the largest challenges in graphene company is the sheer number of opportunities. Overall, we can confidently say that graphene will have a positive impact on most materials, provided you give it the time, the research, the trial, and the validation. These things are not things that all clients are prepared to do. What we do is we look for clients that are prepared to go through those multiple trials, that have a clear expectation around what enhancements they can use and leverage from graphene, what it's going to cost them, where that sits in their value chain. This is very important to us. When I started 18 months ago, our pipeline of opportunities was in excess of probably 300 or 350 different opportunities, and that poses a massive challenge for a team of scientists, or now commercial managers, to filter through those, weed out who we would refer to as just being interested as a sort of tire-kicking nature, versus somebody who's actually committed to going through that process of enhancing their products with graphene. This is probably the largest challenge we have today, and we now have people dedicated to sorting through that. Those are our commercial managers. They come in with industry experience, they know all the key players, and they're trying to find those large-scale commercial clients that are committed to spending time, effort, trial and validation to get graphene into their products. And this is something that then forms the basis of the segments we focus on. This has changed in the last 12 months. Our core focus at the present time is cement and concrete. Cement and concrete represents the largest potential use of graphene overall our entire pipeline. This is not 2 or 3-fold larger than our other segment. This is dramatically larger. Our addressable market today, which we'll touch on shortly, in that cement and concrete space is some 12,000 tonnes of graphene. When you compare that to our immediate addressable markets in the other segment, it dwarfs it. And this is why we see cement and concrete being both a pivotal point or key focus point for us, but also starts to drive all of our ESG focus. One thing that has become apparent in the last 12 months is that a lot of our successful applications are ESG driven. So cement and concrete and its ability to reduce CO2 emissions, it's our core focus. Things like composites and plastics, where we're generating plastics that can aid in solar thermal energy or creating or heating homes via a plastic. Into perovskite solar cells. These are all very sort of sustainable and renewable energy drivers, which is exciting. It's very topical at the present time, but it's also where we see our killer applications coming from. On our segment focus, as I say, our key one is cement and concrete. The second is our composites and plastic segment, and they still make up our large portion of our revenue from last financial year. This will change as we move into this year. We will see a swing, which we see cement and concrete being our largest revenue stream. And thirdly, in contrast to last financial year, we have merged our rubbers and elastomers segment with coatings, inks, etc. And we now have an industry segment called CASE, which is coatings, adhesives, sealants and elastomers. And we also bundle foams into there, and that's led by Peter Osborne out of the UK. So those are our 3 segments, and the commercial managers for each of those segments are really focused on weeding out people that are just exploring the idea of graphene versus those that are actually committed to developing a product. Most graphene applications are a bespoke development. They are a scientifically engineered product that leverages the enhancement that graphene brings, but it needs commitment. It needs clients that are committed to that process, to testing, to validating, etc. Next, in terms of our 2023 priorities, I thought it was really important that we sort of set expectations both to our investors but also to our internal staff, so everybody understands where everybody is participating and driving towards success. Our priorities for 2023 are very, very similar to last year, but have some more specifics around them. Our first priority is revenue generation. This is the same as it was last year, but we are now in a stronger position to drive revenue through our established commercial managers. Our industry focus, and this has come about over the last 12 to 18 months, is a focus on commercial clients, industry clients. It is not a focus on universities and universities telling us how great graphene is. We already know that. We already have been through numerous white papers and research papers to understand the benefits of graphene. For example, cement and concrete, we can now display numerous white papers about how great it is in cement and concrete. What we've done is we've moved that from the universities into industry. We now speak with the world's largest construction chemicals companies to then move that into end products. And that's a really key shift that is mandatory in generating a sustainable business moving forward. And so we've made that change, and that's where we see our revenue growth from. Key to that is our commercial managers. And our commercial managers give us what I'd refer to as the right to participate in these segments. If we think back 18 months, 24 months, where we had a group of scientists that were essentially trying to cater for inquiries and talk about a sales process, not being able to speak the lingo, not being able to understand the best places to get graphene into it, or not even understand the technology of those industries, really is a recipe for failure. And the way we've changed that is we have those industry experts. So in our commercial team, we have Peter Osborne, who is a career in the rubbers, elastomers, and the coating space that knows the right people and the right processes to sell into that segment. We have Lester Lee, based in Singapore, looking after the cement and concrete space, and Neil Armstrong, looking after the composites and plastics. All of them bring a great set of knowledge and gives us a right or a market-leading position to talk to those industries and drive sales. We continue on that industry focus is to identify key distributors and retailers for our product. The way we look at retailers, or distributors more importantly, is essentially just more boots on the ground to sell our product. An example of this is our distributorship or strategic partnership with NeoGraph in the US. It's very difficult for a small company working off a very, very limited pool of resources, both cash and people, to then go and tackle a market the size of the US. The better, faster way to do that is find a partner like NeoGraph, an established American company with a basis or grounding in business in the graphite area, to help us develop into that US market. And that's something that's been very successful. They continue to grow. They follow the same strategy or path as us in trying to develop applications for clients. So that's a good example of what we plan to do moving forward. We are in the process of adding to our distributorships, mainly through Europe and some parts of Southeast Asia, which are very important markets to us. And thirdly, on that revenue generation, as I touched on before, key to this is finding those world-class clients, those clients that are committed to the process of developing bespoke solutions for their materials. The second part in our first priority in revenue generation is being able to resource our materials and chemists, material scientists and chemists. They are a fundamental part to developing an application. We advise our clients on how to use, how to disperse graphene, and give them a first sort of look into how their materials could be optimized using graphene. The resourcing we have in this segment is always under pressure. There is always the question of, do we have enough people in those segments to cater for all the applications we're chasing? As we narrow our focus and we focus on things like cement and concrete and some of the plastics and polymers, etc., the skill sets and the people we use and employ in that segment become more focused, and we get a better bang for buck in terms of how we use them and the outcomes of that. Thirdly, as part of revenue generation, we need to have that world-class production facility, which we have in Henderson. Henderson is a fabulous example of where we've had a huge amount of success in being able to produce graphene. So many companies, so many graphene companies these days, when they do develop a material or a solution in an application, then fall or falter when they can't provide their graphene. We have revenue streams from other graphene companies who are looking for a regular and volume supply of graphene, which is a great place for us to be and proves that we've done something right in that facility. The challenge for the production facility always will be the reduction of cost, how we keep a real tight control of our cost base. And that's something the team there, supported by our team in Manchester, have a high focus on throughout this year. Now, when you look at that as our first priority, we're talking about our commercial, sales and marketing, we're talking about our R&D scientists and our production team. So this makes up 90+% of our team. Everybody is very, very clear on their responsibilities and how they filter into or feed into that revenue generation stream. So it's very important, both internally and externally, people understand that we're very focused in that area. Our second priority is what we call strategic R&D of our future technologies. This is areas in which we see either great demand for graphene or where graphene offers a potential to be a game changer. Now, the ones that we have spoken about, we've publicly covered, is things like our supercapacitor materials, our KNOS, hydrodynamic cavitation process, and also our work in the perovskite solar cells area. Now, as a second priority, we need to make sure that we advance these technologies. These core technologies or core points of focus for us are expensive to develop, but they represent what could be a huge part of our business. But the way we try and fund them is through grant funding. This is, if we take the KNOS process, for example, KNOS is not necessarily a process that we will ever use to produce graphene. It is a process that we have developed in response to a UK government inquiry some years back that gives us the ability to produce from petroleum feedstock battery-grade graphite, high-purity synthetic graphite, green hydrogen as a byproduct, and also has the ability to coat other particles such as silicon, which could be quite interesting in the battery area. So the technology itself, we will continue to develop. It's patented, global patents on that, and could potentially offer petroleum or energy companies a pivot point from burning their hydrocarbons, etc., into producing battery materials. Now, where we continue to have to put resourcing into that is generating the business case in which to sell that technology and develop it further. And that's where we use grant funding. So typically, our R&D of future technologies, we try to source grant funding first and then filter them through as they generate revenue. The third priority is cost control. This is something that we have had really positive progress in over financial year 2022, led by Addy. And this is something we just need to continue being vigilant on how we spend money. We've had a good reduction on what our overall burn rate is, which is really promising, but we need to continue that activity without stifling our innovation. And that's one thing you always run the risk of as you try and control a business very financially tight, that you do run the risk of stifling what you're putting into potential new technologies. And that's really fed in by those external grants, etc. So it's something we'll continue to do. We'll continue focusing on external grant funding for new technologies, and where possible, using grant funding to continue developing current applications. I'll now talk through just a bit of an update on each of our segments. So this is cement and concrete, composites, plastics, our case segment, and also a slide on our technologies and what our future technologies are. So in the cement and concrete space, as I alluded to before, it is our largest opportunity and it's probably the most exciting one. Cement and concrete and the impact of graphene in that, I see it as one of those killer applications where there's nothing really on the market today that can do the same thing. What we have, and where we have come to over the last 12 or 18 months, is that we have an opportunity for the cement and concrete industry to reduce their CO2 emissions by up to 20%. Now this is coming from an industry that is committed to reducing their CO2 emissions by 2030, and we have a solution that essentially can go in with minimum cost impact, with no capex and process change within the manufacture of cement. And it's something that goes in at such small quantities, it's very simplistic in its solution through grinding aids. Now this has become our as I've said, our core focus, and we have now started dedicating people into this segment. We've got a commercial manager based out of Singapore, Lester Lee, who has been in the industry for many years, for an entire career, and he takes over from where Todd McGurgan got us to in terms of that segment. We then supplement that with our materials scientists and chemists, and they are going through the extensive trials that we have on with the Breeden Group, with Morgan Sindall Infrastructure and Manchester University in developing what is known as green cement, or a low CO2 cement. This program is probably the largest one globally in graphene and putting graphene into cement. We're producing about 9,000 tonnes of concrete, which will then be used in an array of applications, including sidewalks and gutters and barriers, etc. And it is really a key differentiator for us. We're one of the only companies globally in the graphene space that has had a trial of that magnitude. In terms of revenue streams for the segment, we have both people trialling graphene in as a grinding aid, but large-scale developments with our partners like Fosroc, and now a second commercial scale trial with one of the world's largest construction chemicals company. This is really how we see it going forward, and across the people that we currently speak to, that we're currently in either development process or negotiating joint development agreements, it represents an addressable market of over 12,000 tonnes of graphene. So it's a huge segment and hugely exciting considering the progress we've made in that space over the last 12 months. Our key activities in the area is addressing and completing the program with Breeden, which is due for early next year, and to continue accelerating those joint developments with various grinding aid and admixture companies globally. With existing clients, those are the people that have been trialling and working with graphene in their cementitious materials for some time, we are starting to see products reaching the market. GTM in New Zealand have now launched their Hex mortar product recently, and we've also got an admixture that we sell as First Graphene, but also our partner in South Africa, Nanoproof and Glade Chemicals. So those are two products that have made their way onto the markets and are becoming readily available over the coming months. Our expectations for 2023 is just to keep that progress in various segments. Each one of those construction chemicals companies, whether they're producing a grinding aid or an admixture, they represent individually more demand for graphene than we have the ability to produce. The focus is getting through those trials, getting commercial products launched through those companies as quickly as possible, and starting to be able to recognise a much higher level of revenue. So it's an exciting place to be in what is our largest segment. In our composites and plastics space, it still makes up our largest source of revenue from this past financial year. Our partner in Western Australia, ALT, make swimming pools, have really developed and grown their use of graphene over the last 12 months, and that's exciting. It is a point of differentiation for us. We have now some 5 to 10 repeat clients that are on a production ordering schedule. Every month they place an order. ALT is one of those. This sets us apart from most other graphene companies that are focused on graphene or graphitic type admixtures and products. Most companies in the graphene space are still at that development level. They haven't made that jump into being able to fulfill production demands, which we have. And that's the first step in generating a much higher level of revenue. ALT and our Western Australian early adopter clients are all important piece of that. In this space, we've also made good progress over the last 12 months in the solar thermal roof tiles. So these are roof tiles that use the sun's energy to heat water, to heat homes. And those that keep abreast of the energy challenges that Europe is having at the moment will understand how important that segment is proving to be. We've made good progress. We've recognised a revenue stream from that segment due to the consultation and development process we've done, and that's advancing quite nicely. So we expect to see that progress into a more regular revenue stream over the next 12 months. Our growth in our master batches, so a lot of people are still using our master batches as an easy way to get it into their polymers and plastics, and that's also growing. It also is an area in which we continue to invest. We did provide a lot of updates in our HDPE master batch, which is continuing in our development cycle. These things require a lot of repeat trials and validation, and in a material like HDPE, where the expectation for performance enhancement is quite high, we need to ensure that we can deliver on that. So we continue to trial that, and we also work with master batching companies in the UK to optimize that. So it's still a work in progress. But all of our suite of master batches are through various projects being trialed at the present time. One of the key expectations of 2023 for this segment is to grow relationships with people that have a greater access to clients, and that is people like compounders and master batches. We've grown relationships with a number through Australia and through the UK and Europe, and we continue to do that because they have a really good access to clients that are looking for optimized polymers. And that's starting to cement and see an early stage revenue stream, but also consultation revenue streams. So that's an exciting place. In our case segment, we continue to explore a large number of smaller opportunities. Typically in the case segment, we're talking about multi-party arrangements, which include license agreements with coatings producers, or into elastomeric type products that are a much more complex route to market. Peter Osborne, our commercial manager for the space, has really opened up a large number of doors in the way we sell these products into the case segment. We have an array of opportunities that range from textiles, from things like geotextiles, to sportswear and coating sportswear for abrasion resistance and waterproofing, all the way through to a much broader range of shoe manufacturers. We've had early success with the likes of Steel Blue in making boots. That's now expanding into trials in the sports footwear including golf shoes and things like that. So it's an area that is developing, but typically represents smaller opportunities, unlike what the cement industry is. In terms of our strategic R&D, we have had some repositioning of our team in that group within Manchester. The way in which we resource our applications requires specialist skills, whether it's a polymer type chemist or a material scientist in the cement and concrete space, and also the leadership of that team. It's quite diverse, and those requirements have changed quite dramatically over the last 12 to 18 months. We're now at a point where we have the right skill set to progress a broad array of applications, and that's exciting. But at the same time, we need to be wary of having the right people and right skill sets on board for our core technology developments as they move forward with grant funding or the likes. Our supercapacitor materials continues to develop. It is something that we work in hand with an external party to help us optimize the solution we have. The potential for this is significant. I see there being a lot more opportunity in the supercapacitor space for graphene than, let's say, batteries. They operate differently, but they benefit far greater from graphene. So we continue with this. We're in our next generation of pouch cell, which we're having made externally. We'll then go into test. When I say pouch cell is a means by which you test the material and the electrolyte. It's not necessarily how a supercapacitor would be made using this material in the longer term. It's only a method to be able to test it, the materials, and understand the performance of it. The hydrodynamic cavitation, as I mentioned, we're continuing to build a business model over how we would sell this, how we would attract investors in that technology, and how they would benefit from it. One example of that is the process itself could be used to be based off, let's say, a feedstock or a waste feedstock that enables a company to provide graphitic materials for battery anodes for EVs. A big market for that, and something that is woefully unsupported, is the American EV market, and trying to drive domestic production of synthetic graphite and graphite for anodes. So that's something that we continue to explore at a processing and grant funding level. Thirdly, we have started a new joint development agreement with Zebco, which is a catalytic heating company in the United Kingdom. And this is a technology which leverages three advantages of graphene, both from a graphene enhanced fluid, to heat exchangers and optimizing the coating on heat exchangers, and the polymeric advantages of graphene. So that's something that is really pulling upon technologies that we've developed with clients and pulling it together for a solution. So that's something that, again, could provide a solution for a market that is desperate to get alternative sources of heating and electricity and energy. Lastly, the main development or the main focus point of our R&D team is also to help us reduce our cost of our production process. So that is an ongoing thing. That is our standard process. So just to wrap up, we've made progress over 2022, both in revenue generation, cost reduction, and understanding our product costing going forward. And those are three really critical aspects in our drive to that break-even point. When we look forward into our pipeline, we have some very, very large opportunities like the cement and concrete that, even at a trial basis, represents very good volumes of graphene. We have exciting projects like our work in the perovskite solar cells, the solar thermal tiles. Each one of those in isolation could outstrip the capacity we have today if successful. And we continue to run that sort of 4 or 5 horse race to see which one moves the fastest. Our confidence has grown dramatically in the cement and concrete space. It's a huge opportunity, but does take a lot of material scientists, chemists to understand how it works. We've got the right partners, and we continue to grow that list of partners, which are all industry commercial players, some being the top sort of 5 to 10 largest companies in the space in the world that are committed to the message of getting graphene in and getting the advantage of it. So it's a good outlook when we come to talk about our segments. Our clear priorities throughout 2023 remains as revenue generation. We understand the importance of that, and our challenge is navigating to get those clients that can realize the revenue in the fastest possible manner. We've got a great technical team and we've got a great commercial team now, and those two are really important to success in generating revenue. We continue on our strategic technologies. We do use it as an opportunity. We use the opportunity of grant funding to accelerate those, and that becomes a deliverable that we will focus on throughout this year, is getting grant funding and accelerating those. And lastly, we are really trying to tightly control that cost. We are aware of our burn rate and trying to drive that down. Gives us a longer runway to get to that point of break even, which we're all very, very focused on. A few challenges just to add to our wrap up. We do acknowledge that our need to keep our investors aware and up to date of what we're working on. We are governed and restricted on what we can say, how we can say it, when we can say it, and we have worked into a process of trying to provide regular updates in our quarterlies. The quarterly process is essentially an open forum for us to disclose what we need to about our projects, and we tend to do that. As part of that, and part of our refinement of our segments, and this is a challenge in keeping a core focus in segments, it means we also have projects that fall by the wayside, that are stopped, that are put on the shelf for another day. We work on a limited resource base, both cash and people, and so we pick what is the biggest opportunity on the fastest path to revenue. So that means there are casualties of some of our projects along the way, and we do try and keep people abreast of that, but it's not a discussion point as and when those projects are killed. Please refer to our quarterly for updates, and the quarterlies represent where we're at with the bulk of our key focus points. So where we are with our Breeden trial and the development of green cement, where we are with our Synergy and our solar thermal roof tiles. Updates will be timely and in the quarterly. Another challenge that we have is really ensuring that we have the right people in the right place with the right skill sets. One of the challenges that we had earlier on is, as I've said before, about getting commercial people to drive these segments. This is key to our strategy and having people educated in the industry or the segment they're coming from. And that takes some refinement, it takes refocusing, and it does mean ultimately a degree of churn within the team. We're in a good place now. We've got the right people on board, both from a scientist perspective as well as the commercial side. And I think it's really well focused for the next 12 to 24 months. To complement the refinement of our team and to ensure that our team is growing, both in terms of skill set, but are also committed to the business, we have started to reward people more with a stock or equity placements in terms of performance rights. This is very critical to us because it gives ownership to those people in our business, and then they commit to our business at a greater level. It's important, it's a great motivator, and it's very, very effective. We will continue to have refinement of our team. That goes without saying. As we evolve, as we focus our business, as we get markets and segments pulling ahead of in that horse race, we will refine it further. That's just part of our being flexible in these segments. I myself, obviously based in Singapore, do move between our team in Henderson and also the team in Manchester. We need to bear in mind when we talk about Henderson, we have achieved a really, really good milestone in getting a production facility that can produce 100 tonne of our material. My predecessor did exceptionally well in generating that capability and capacity in Henderson, but it's now a function that is complete. It's done, and at this stage we need to focus on the commercial aspects of our business and generating revenue, not perfecting and growing capacity. When we last raised capital, it was very much a case of how do we use that money to accelerate the commercialization. It was not about investing in capex to make more capability or capacity. We've got that. We don't need to invest in that sense at this stage. It's all about generating revenue, and that's where we focus. Our team in Manchester has grown. We have definitely put more material scientists and chemists in place there, and that's where we see the shortfall in terms of revenue and accelerating what we're doing in the likes of cement and concrete. So we continue to invest in that area. And lastly, again, we thank you for your support over the past few years. We continue to work in a very, very focused manner on driving towards that point of break even. It is on the horizon. And the segment and the route we will get there is becoming clearer as we move forward. Thank you.